there, my name is Kiri and I'm a flower farmer here in Western Washington in Zone 8A. This is part 3 of a 5-part series where I am covering accounting basics and fundamentals that can help you run a successful flower farm. So just a reminder that although I do have an accounting and tax administration background, I am not a licensed CPA or lawyer, and I am not your CPA or lawyer. So everybody is going to have different situations because of the location of their business and all these different moving parts. So take the information that I'm providing as just kind of general information. If you have any questions or specifics that you are looking for answers for, go ahead and talk to a CPA who is familiar with your specific tax situation. This is not tax or legal advice. If you haven't already checked out parts 1 and 2, which cover bookkeeping and financial statements, go ahead and check those out because they feed into this one. So this video is all about taxes. So there's a lot of taxes out there, there's a lot of taxing jurisdictions out there, and this information is going to be very general because there's so many factors that are going to affect this. So the two things that are going to have a really big impact on what kind of taxes you have to pay are going to be your business structure. So whether you're a sole proprietor, LLC, corporation, that's going to change a lot that has to do with your federal taxes. And then your location, so where you physically do business and where you're domiciled, that is going to affect a lot more of your state and local taxes. So my business is a sole proprietor and I'm located in Washington, so I've got a certain set of rules that I have to follow that you may not have to follow if you're not here. So we'll just talk broadly about the different taxes out there. So potential taxes that you might have to pay would be federal income taxes, self-employment taxes, sales taxes, use taxes, property taxes. In my state we have a business and occupation tax, which is a gross receipts tax. And depending on your business model, if you're selling things in other jurisdictions, like through the internet on Etsy, for example, or through your website, you may have some tax obligations in the jurisdictions that you are selling to. So watch out for that. We'll jump into those here in a minute. If you haven't watched my other videos in the series, the takeaway lesson is always to use accounting software. And that applies to this video as well. It's going to help you stay organized, it's going to organize your expenses, and it's going to just make everything clean and easy, and you're going to thank yourself when it comes around to tax filing season and you have clean and organized books ready to rock and roll. We'll also track your income so you know how much you need to report, and then it helps you figure out your deductions because it tracks your expenses. I've mentioned before, but I use QuickBooks and it helps me a lot, and then I use TurboTax to file my taxes. So they are like the same company, so it's super easy. For federal taxes, something that you might be surprised about if you haven't already filed your taxes is that farms that are sole proprietors or LLCs that are a disregarded entity with a single owner, those are going to file typically, okay, not a rule, don't take my tax advice because it's not tax advice. You're probably going to use Schedule F to file your farm income, which I think a lot of people might be familiar with Schedule C, which is typically what businesses use, but farms get a special one. If you're not familiar, you report your income to the federal government, but there's certain expenses that you are allowed to deduct from your income, which can lower your taxable income and effectively lower the taxes that you are owing. Your accounting basis that you're using for maintaining your books and records is going to have a big impact here specifically. So if you're operating on a cash basis, then your taxes are a lot more simple because you don't have to worry about valuing inventory and things like that when you do the accrual basis. Something else to consider, it's called the de minimis safe harbor election. So any transaction amount, so the receipt shows that it is less than $2,500 and it would typically be an asset to your company. So like computers or things like that, you can make an election to expense all of those things so that you don't have to maintain those as assets, which has the drawback that you need to depreciate those every year on your tax returns. So that has the impact of, in the current year that you purchased the item, increasing your expenses and lowering your taxable amount. So instead of taking that depreciation over the years that that asset is useful, you take it all basically as an expense in the current year. So that can have some impacts on your losses that you might have to take, but it does make maintaining your books a little bit easier. The de minimis safe harbor election is going to have an impact on your financial statements that we just covered in the previous video. So you need to maintain an accounting standard, written policy, saying that you're going to be doing that for your books and records, and basically you might not have a lot of assets on your balance sheet if you're expensing a lot of them, which at this point I've pretty much expensed all of mine. Something else to watch out for is if you pay any contractors over $600 for doing anything on your farm, then you need W-9s for those and you need to file those. So something to watch out for is whether or not your business is classified as a hobby or actually as a profit-seeking business. So the IRS lets you take expense deductions for your business for certain expenses, but if you claim a loss for too many years, the IRS kind of looks at that as, are you really in a profit-seeking business venture, or are you just kind of doing this as a hobby? And if you are classified as a hobby instead of a business, you're not allowed to take a lot of the deductions, and that can really impact how you report on your federal tax return. So that is a drawback of the de minimis safe harbor election, is that increases your expenses and could result in a loss. So if you're taking a loss for too many years, you gotta watch out for that. The IRS does look at a set standard to figure out if you are a hobby or a business, and they are considering all of these different factors together, not just one on its own. So they're looking to see, have you put in the time and effort necessary to generate a profit? Is it standard in your industry that you won't generate a profit for a couple years? Do you have the necessary knowledge to succeed in this field? Are losses beyond your control? They're going to look at all these different factors together to figure out whether you're a hobby or business. So something to watch out for. If you have questions on this, talk to your CPA. I am not a CPA. Don't listen to my tax advice because it's not. All right, on to state and local taxes. There's a lot of them to watch out for. So each state and locality is going to be different. So here in Washington, like I mentioned, we have a business and occupation tax, which I think only like 8 other states have that. So it's pretty rare. So it's tax due on your gross receipts from sales based on your business activity. So growing flowers and selling them to end consumers is a retail activity, so I pay retailing B&O on that. If you're doing other things, this is kind of more of a quirk of Washington, such as sewing sachets, that's actually considered a manufacturing activity, so you would pay a different B&O tax rate on that. We also have a sales tax, and some states like Oregon or Alaska don't really have a sales tax. Something I want to point out that I think would be really helpful for everybody to know is that if you're selling a tangible personal property to an end consumer, such as flowers, you likely will need to collect sales tax from your customers, and sales taxes are kind of a big deal. They are considered trust funds of the state, so you're collecting it and holding it on behalf of the state. So if you use those, misappropriate those for things beyond just giving it back to the state, you can get in pretty big trouble for that. And a lot of people set up LLCs and things like that to avoid liability and things like that, but that is one of those situations in which the state can pierce the corporate veil and go after you personally for that, and they penalize that heavily. So collect sales tax when you need to and remit it when you need to. Don't mess around with that. Keep that in a separate bank account and hold that until you need to give it away. That's a good way to make sure that you're not messing around. It is your responsibility to know how much you need to be reporting, what you need to be reporting, and when you need to report it. So you cannot feign ignorance to reduce your liability. In fact, it may actually cause you to have more liability. So get to know your local tax laws. And if you're going to have a sales tax requirement, you're probably going to have a registration requirement. So, these are things to consider, that maybe you should try to get a business license and collect taxes that you are owing. Something else to consider is use tax. So use tax is a match to the sales tax. So if somebody doesn't charge you sales tax when they're supposed to, you as a consumer owe use tax on the same amount. at least here in Washington, and most states have that matching. So businesses do owe use tax. There's quite a few use tax exemptions for farms, but certain things like buckets or things like that you're using in the course of your business, you're probably going to owe use tax on those. Make sure that if you are purchasing from, say, Johnny's at wholesale and you're buying all your seeds, and you also buy some buckets from them and they don't charge you sales tax, that you are paying use tax on that to the state. There are some exemptions to these different taxes that you can look into. So if you are buying seeds and bulbs at wholesale and you want to sell that to your customers, you're going to need a reseller's permit, which basically says, hey, don't charge me sales tax because I'm going to resell these to somebody else who's going to pay sales tax. So you typically present that when you sign up for your vendor accounts at wholesale distributors like ADR or something like that. Don't misuse that. You get big penalties for using that incorrectly, so use that responsibly. Anytime that you're selling wholesale, you should be collecting a reseller's permit from that person. So if you're giving your reseller's permit so that you don't pay tax, right, you give it. But if you aren't charging tax to somebody, you probably need to collect a reseller's permit from them. There's some farm exemptions for use tax on equipment and things like that you could look into. There's also property tax exemptions depending on where you live. Lots of different exemptions. Look into it for your taxing jurisdiction and locality. Talk to your CPA about your responsibilities. Something else to watch out for that a lot of people who make YouTube videos and say, here's a get-rich-quick scheme, sell stuff online. Watch out, because if you're doing businesses in other jurisdictions, so say you're selling sachets online through Etsy, you may have a sales tax requirement or other tax requirement for the jurisdictions that you are sending your products to. So there's something called Nexus. So if you have so many sales or a physical presence in different states, you may have to collect your remit sales tax in that state, which also means getting registered and things like that. Something that might be a little bit more applicable if you're kind of staying local is if you are going to another city to a farmer's market to sell your flowers, you may need a business license in that locality to operate in their city. And you may need to also collect sales tax at a different rate than from your farm or wherever you've been selling it. So anytime you add a new product or business activity, do a deep dive into what kinds of licensing requirements that has and what kinds of taxability that has, because it may be kind of big impact. For example, here in Washington, just about everything needs a license. So if I wanted to buy bulbs at wholesale, to get that bulk discount and then resell bulbs to other flower farmers or to end consumers, I would need a seed selling license to do that. That has an annual fee. Another quirk about Washington is that if I wanted to sell anything in soil, so seedlings or cuttings or things like that, I need a nursery license. That is a super quick overview of potential taxes and things to be looking out for. There's lots of resources online. The IRS publishes lots of resources. Your state Department of Revenue will also have a lot of resources online. And I'll also link a blog to a different flower farmer who's a lot more bold than I am in providing more detailed information about taxes and things. So that's a really great blog to check out as well. End of the day, the final message: this is not tax advice. This is not accounting advice. Talk to your CPA or a lawyer if you need to figure out what your requirements are, because everybody's going to have a different situation and different reporting requirements. So let's move on to the next part of the series, which is managerial accounting. So I'll have that linked here, and this is where we figure out profit and do the deep dive into the nitty-gritty. Thank you so much for watching, and I'll see you next time.